company. But where the excitement is, where our growth is through our technology called high-temperature pyrolysis. And the way to think about that is we're basically heating stuff up or cooking it in the complete absence of oxygen. It gets converted into two product streams. One we call biocarbon. It's a solid charcoal-looking material. And the other is a syngas that we can further process into green hydrogen or renewable natural gas. So some pretty exciting outputs from that system.
Andrew White joins me now. He's the co-founder and CEO of CHAR Technologies Ltd, trading on the TSX Venture under the symbol YES, and in the United States under the symbol CTRNF. Andrew, welcome.
Good afternoon now. How are you?
Good afternoon, yeah. I'm doing well, thanks. So let's start. What's the overview? What is the business of CHAR Technologies?
Yeah, the core of what we do, we've got a couple of business units. We're an environmental clean tech development and services company. But where the excitement is, where our growth is through our technology called high-temperature pyrolysis. And the way to think about that is we're basically heating stuff up or cooking it in the complete absence of oxygen. So put material in, heat it up to 850 degrees Celsius. Nothing can burn because there's no oxygen there. And it instead gets converted into two product streams. One we call biocarbon. It's a solid charcoal-looking material. And the other is a syngas that we can further process into green hydrogen or renewable natural gas. So some pretty exciting outputs from that system.
Yeah, interesting. So what are the feedstocks that you thrive upon?
So we have we talk about feedstock in the same way we talk about market verticals. So there's kind of three primary feedstocks, three primary market verticals we participate in. So the first is wood residuals, wood waste, woody biomass. So think like sawdust or bark or offcuts from sawmills, construction demolition wood waste, things like shipping pallets that have been collected and shipped up. We can process that. That's what we use when we make our biocarbon products that go into, say, the steel industry to offset their coal consumption. And that's also what we use when we convert this material into renewable natural gas. So that's wood waste, wood residuals, process it. So that's kind of option one. Vertical feedstock two is called anaerobic digestate. It's basically a residual, think like a compost that's left over from a biogas plant. And biogas plants are used to process sort of food waste, organic waste into renewable natural gas. And so I think it's important to kind of really emphasize that using wood, we make renewable natural gas. In this option two, we're actually supporting renewable natural gas producers using organic waste. We take that material and we convert it into biocarbon and either renewable natural gas or green hydrogen. So our recently announced project with Hitachi Zosen and Nova in San Luis Obispo is that middle ground where Hitachi operates a biogas plant making biogas. We take their compost, digestate, and convert it into green hydrogen. The third market vertical is biosolids. So that's the leftovers from a wastewater treatment plant. And in that case, really what the market opportunity is less so on the product outputs and much more on our ability to destroy some of these forever chemicals known as PFAS, polyfluorinated alkyl substance. There's a few movies out about it. Dark Waters is kind of the more prominent one. But these materials are in anything non-stick or water resistant. So think Gore-Tex or Teflon or that type of material. And our high-temperature pyrolysis process destroys those contaminants. So it's still the same kiln system. It's still the same module. We build the same thing in these three market verticals. Kind of the way I like to describe it is we're building the same oven, and then each market vertical, we've got a different recipe book that we bring to the table.
Sure. So is this a carbon-heavy emitting industry, or is this a carbon-reducing industry overall?
So overall, carbon reducing, so carbon negative. And it's negative for a couple of reasons. First is that our feedstocks are what's known as biogenic. So, they exist on the surface of the earth. We're not pulling carbon out that's been sequestered. Second is our plants are self-sufficient. So we get 850 degrees Celsius. How do we do that? It's with the gas that we generate ourselves. So we're not kind of burning natural gas to make green products. We're self-consuming some of our own gas. So that creates not only a very low operating cost because we don't have to buy energy, but it also helps ensure that we're in this carbon negative space. And then the third piece is if we're making renewable natural gas, we're offsetting fossil natural gas. If we're making biocoal, which we've branded Clean Fire, we're offsetting fossil coal. So we're allowing those fossil fuel, be it natural gas or coal, to remain sequestered essentially. So it helps our end clients, end users of the products to reduce their CO2 emissions. And we, at the same time, are carbon neutral or negative, depending on which of the products we're talking about.
So is this a sort of a platform that can generate carbon credits under any existing regime?
At the moment, it is in the voluntary markets primarily, and I should sort of preface that the use of renewable natural gas by, say an industrial customer, if they contract directly, does reduce their GHG emissions. So depending on which regime, if they're in Ontario and they're looking for compliance credits, if they're in Quebec or California and they're in the WCI or whatever the different regimes are, that absolutely directly helps them. As we make these biocarbons, some of the applications are soil amendment or remediation or other things where we're not consuming them. So it's not being used in a steel mill, it's going on soil, or it's cleaning up acid mine drainage. And in those instances, because we're fixing carbon, our process is almost like a natural carbon capture and sequestration. So we convert the woody material that took CO2 out of the atmosphere to grow the tree into a fixed carbon that sequesters the carbon in the soil. And under that scenario, there are a number of voluntary carbon credit markets that are in existence today that do buy those credits. And I think that opportunity will continue to grow into North America as well.
Sure. Okay, so then what exactly is the revenue model? Do you charge companies to take their waste off their hands? Do they pay you to take it away? Obviously there's a market for any biogas, but what is the primary revenue streams?
Yeah, and again, there's a couple, and we'll kind of take it back to those market verticals. So when we're talking about wood, woody residuals, that area, we are pursuing a build, own, operate model where we will build, own, and operate the facilities ourselves or with joint venture partners. Generally, the wood has a low feedstock cost, so there is an input cost, but it's relatively minor because there's not a lot of other uses for this woody material. But it's got to be collected and processed and all that good stuff. The revenue primarily for that market is on long-term renewable natural gas offtakes. There's Canadian provinces that have mandates to meet certain renewable gas levels in their grid, and they're willing to pay a premium for renewable natural gas into those grids to meet those targets and mandates. The secondary product is, of course, the biocarbon or the biocoal that we make, and we can sell that into the open market because it functionally operates the same as fossil coal. So it's basically a drop-in for companies that are looking to reduce their GHG emissions. Mm-hmm. In the biosolid space, we're basically an engineering, procurement, construction management type company. We're building, designing, and selling high-temperature pyrolysis units into that market. It's a much more mature market. There's some great, well-established market players that we can leverage our relationship with to get into those sales channels. So on the one hand, we've got nice long-term revenue. On the other, it's shorter term, but those nice equipment sale revenues. So we are absolutely pursuing both. And then in the center market, this digestate compost space, it's a bit of a blend. So back to the Hitachi project, we're delivering that under a build, own, operate, transfer model. So we build, own, operate it, we generate revenue off of the plant, and at some point there's a transfer initiated where we sell the system to Hitachi, and we get some additional licensing revenue streams after that transfer.
Okay, and where are you at now in terms of totally developed revenue streams and customers? Are you still in the development stage? Are you fully commercialized? Are you sort of transitioning? Where are you at?
Yeah, I mean, I think transition is a fair statement. So we've got a commercial plant in London, Ontario. We've got a commercial order for 1,000 tons of clean fire, which we're fulfilling right now, in the midst of fulfilling it, I should say. We've got our contract with Hitachi, so we're building a plant down in California, and we're looking to continue to expand. So, we've got our plant, we're building more as we're growing into this transition from having developed it to now full-on commercialization.
Yeah, for sure. Okay, so then in terms of profitability, are you profitable now, or do you have a sense of when you will be?
Yeah, we're generating revenue, I should say. We, in February, completed a $6 million private placement, which allowed us to invest in people and grow the team. So we were at kind of cash flow break even pre-pandemic, pre-COVID. Raising some money allowed us to make a lot of investments. So that brought us into a little bit of a spending regime, because we are growing the engineering team, so we can take advantage of these great opportunities. So we can revert back to cash flow neutrality if we had to, but that's not going to fuel the growth of the business. We want to be investing in team and projects and growing much more quickly than kind of that organic growth cash flow neutral model would allow us.
Right. Okay, well, that sounds like a really interesting project, Andrew. We're going to follow with interest. I really appreciate your time today. We'll leave it there, and I'll come back to you soon. Thanks for joining me.
Absolutely. Appreciate the chance.
You bet. Bye for now.